Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma. With me, Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, you will get a chance to connect with us live on the WhatsApp number that will be flashing on our screen. But before that, let's have a look at what the markets are up to. So, Cheryl, all-time high for the Nifty 50 and even Bank Nifty is holding on at least for now.
Absolutely. A very good morning to you, Shrishti. And we've hit a fresh record high level once again when it comes to the benchmark indices. Both Nifty as well as Sensex are at record high levels. Even the cap index is also at the record high levels in today's trading session. Talking about the advanced decline ratio neck to neck, I must say advanced decline ratio as of now that you can see on the screen with Eicher Motors, M&M, Maruti Suzuki all gaining on Nifty. They are top three gainers on the Nifty, followed by Tata Consumers as well as Reliance Industries now making to the list. DV's Laboratories also seeing good gains. But on the flip side, the Apollo Hospitals, they're seeing a sharp knock of 1.7%. Top loser on the Nifty, followed by Adani Ports. You saw your block of about 0.3% equity take place for Adani Ports on an intraday basis. Wipro, which started off on the positive footing, now has actually given up all of those gains, now in the negative territory. Remember that the reason why Wipro is also reeling under pressure is the fact that there has been a management rejig where you have Thierry Delaporte, who's actually resigned as MD and CEO of the company within 4 years of being at the helm, and you have Srinivas Pallial, who is going to be the new MD and CEO. So that's Wipro for you, that is under pressure in trade today. Apart from that, Nestle and UPL are the other stocks as well that are declining in trade. Let's take a look at what the sectoral indices are doing. Needless to say that the auto index definitely will be on the firm footing, given the fact that the top three gainers on the Nifty are from the auto index. So Nifty auto index 1.6%, but it's the realty index that's stealing the show once again. 2.3% uptick coming for realty index. You have energy also seeing good gains, while on the flip side is the IT index and the PSU banking space that is taking a bit easy. But talking about the realty space in particular, Shrishti, this particular sector has seen good gains, sharp gains coming in. Also, a lot of companies have come out with their Q4 updates.
Well, yes, that's why the excitement. So let's deep dive into the real estate space as well on the Buy Now, Sell Now lens today. And we actually caught up with a lot of management because the real estate opportunity in India is large, and that's the word coming in from the biggest developer in the country, DLF, Max Estates as well as Prestige Estates. So let's listen into their outlook on where the industry is headed.
India is today in an extremely strong position locally in terms of its economics, in terms of its policy making, in terms of its obviously political stability. Clearly, I mean, there is optimism in the air, so there's no reason why the price does not strengthen going forward. Obviously, the pace of it could moderate, I'm not saying that. But clearly, I think we are all living in right now in a more optimistic scenario, at least for our, I'd say, the premium and the luxury and the super luxury products.
We are seeing very strong demand, and we are also seeing significant consolidation towards organized, branded and trustworthy developers. So if you look at it, we will close this year at about 1,800 to 2,000 crores of top line. FY25, we have already shared that we are looking to cross 3,000 crores. So effectively, and we've already publicly stated that we are going to look to grow 2% every year on the top line.
We're quite happy with the type of response we got for our sales, and I think Mumbai has done well, and we are looking to launch a couple of more projects very soon, and I believe even those give us some positive numbers. To stay relevant, we have to make sure that the price doesn't just spiral off, because then you breach the affordability barrier. Construction costs, the land costs and overheads have gone up, and we do need to make a fair margin. And you've seen our numbers, always we land up with the single-digit margins.
All right, and now that the macro picture is clear, let's also understand how the real estate players have fared in the quarter gone by. That is the Q4 of FY24. Ashesha is here to give us all of that update. And Ashesha, yes, what's the operational update for fine print looking like? What's the overall trend that one can make up from the numbers that have these companies have come out with?
Well, yeah, across the board, all real estate players have reported very strong set of operational data for the quarter gone by. Let's start off with two which reported operational updates over the weekend. First up is Signature Global. Pre-sales bookings for the quarter gone by rose by nearly 240% on a year-on-year basis. Collections too saw a solid up of about 71% to touch that 1,000 crore mark. And sales realizations for the full year FY24 also saw a solid uptick of 50% on a year-on-year basis. Moving on to Keystone Realtors, then their pre-sales for the fourth quarter rose 78% year-on-year, with area sold seeing an uptick of about 37% on a year-on-year basis, and it added 4 more projects in its kitty in the fourth quarter with a gross development value of about 2,950 crores at the end of fourth quarter. Moving on to Macrotech Developers, it reported its numbers a while ago, but very strong data coming in from here as well. Pre-sales beat their own guidance to come in at 4,230 crores, which is an uptick of 40% on a year-on-year basis. Collections also saw a solid uptick. Another positive for Macrotech Developers was the reduction in net debt. In fact, their debt declined to about 3,000 crores versus 7,000 crores at the end of last year. So, a reduction in net debt along with new projects which they added in the quarter gone by with a gross development value of about 20,300 crores, which is also way ahead of what the management had guided for earlier. So, across the board, Macrotech Developers also reported strong set of operational data. Last, let's talk about two other players, Sobha and Puravankara. For Sobha, sales value rose 6% for the fourth quarter. It was not as impressive for the fourth quarter, but if we look at the full year, sales value solid uptick of about 28%. FY24 versus FY23. Lastly, Puravankara, which reported highest ever sales value in the fourth quarter at about 2,000 crores, which is up a solid 93% on a year-on-year basis. So, across the board, all real estate players have reported strong pre-sales growth and collection in fourth quarter as well as for the full year FY24.
Well, thanks much, Ashisha, for giving us that lowdown on what the numbers are being reported by the real estate plays. But that's about the fourth quarter operational update. But what about the prices then? Where are the property prices headed in the next 12 to 18 months? Let's listen into what Sudhir Pai, CEO of Magic Bricks, had to say about the roadmap for prices.
If you look at the last 12 to 18 months, prices have risen considerably, right? Way ahead of GDP if you use that benchmark. So they've grown 22%. In fact, under construction have grown even higher at about 30%. We see that moderating. I don't think you're going to see those kind of price increases over the next 18-24 months out. It's also healthier if prices were to not increase in large spurts, because when that happens, you end up with a larger base of investors rather than end users. And over the long period of time, it is the end user who carries the market, right? So I think moderate price increases will be healthier for the market. We are seeing prices moderating. Like I mentioned a while back, sequential price hikes are coming down, and we think therefore, the price hikes in the next 18-24 months will be a lot more modest than what we've seen in the last 12 months.
All right, so that's the word coming in from Magic Bricks when it comes to the pricing trend, and that's like a holistic view coming in on the entire real estate space, what the company honchos had to say, what the pre-sales or collections for the quarter gone by were looking like, and also where the prices are headed. So let's bring on board our guests for today. We have Kunal Bothra as well as Ashish Maheshwari joining us to tell us what should you do when it comes to investing in these real estate players. A very good morning to you, Kunal, as well as Ashish. Thank you so much for joining us on Buy Now Sell Now. And Ashish, let me come first to you and get your view when it comes to the real estate space. You heard Ashisha talk about the companies that they've reported their operational updates. You also had the companies heads also talk about the prospect of the roadmap going ahead, and the prices seems to have moderated when it comes to the real estate sector. But what's your take coming in on investing in this space? Which one is the companies that you think will stand out going ahead despite the sharp run-up that all of them have witnessed?
Yes, I agree. I think whatever the positive commentary we have heard on your channel is something very realistic, number one. Number two, this is a sector which is akin to what kind of rally we saw in defense or power, in railway. Now the next rally which will really come in is into real estate. Again, if we see in organized real estate players, there's not hundreds of companies which are available. You can you have a space of around 10 to 12 such companies only where everybody is just putting their money. And this is the reason why the valuation of these companies are improving day by day. Because again, the reason is in 2023, we saw record sales of residential unit. And another trend which has changed, there's no investors, and the cash component which used to be there in real estate sector has come down considerably. So all actual users are there who are making the beeline to buy the new products of Godrej or DLS or Macrotech. I think this is something positive, and market is recognizing this trend, and the way people are upgrading themselves from 1 BHK to 2 BHK to 3 BHK, and from tenancy to ownership of flats, etc. So I think the momentum in sector will continue, and 2024 will be another golden year for this sector. And in sector, I like DLF primarily because they are the only recognized or the sizable player in northern Indian market, along with Oberoi Realty as far as Mumbai markets are concerned, and Prestige Estates, the way they are moving their foothold and other than Bangalore to other cities also looks very promising.
All right, that's the fundamental take coming in on the real estate pack from Ashish. But Kunal, coming to you, time and again you have highlighted a lot of counters from this particular sector. At this point in time, where do you see the opportunity still lies in?
Morning. So, first on the market, I'm very bullish on the indices, even though, both of you guys are wearing red and seem like you're bearish on the index, but I'm very bullish on it. So, as a contra feature. On the real estate pack, I would, still be very bullish on the entire pack. So, we've been flagging off stocks, particularly the likes of DLF as well as Anant Raj. These are the two names we've been time and again highlighting over the last 2-3 years. I remember, I think at a point, DLF was almost at 350 or 370 levels towards a point where Anant Raj was, I think, around 120 or 140 odd, mark, and these stocks have done exceptionally well, almost 3x kind of returns for these names. I would still be bullish on the entire real estate pack going forward. And my sense is now traders could start adding towards few of the other names. For example, Godrej Properties is something which has started to perk up quite well. The charts have been looking very attractive. The long-term prospects now seem to be coming on into its fray for Godrej Properties. That's another stock which one could look to add from the entire pack.
All right, so that's the view coming in from both of our experts when it comes to the real estate pack. You had Ashish Maheshwari talk about the fundamental take, also talking about how people are now upgrading. I wanted to go back to Ashish and actually ask, are you talking about this from personal experience or no, Ashish, given the fact that, yes, I think we have seen a lot of them actually move from a tenancy to buying a house or even upgrading from 1 BHK to 2 BHK. You spoke out of personal experience, or you have been reading too much into these company numbers?
No, other than company numbers, you just see in your vicinity itself the kind of redevelopment which has happened. And if you see even if I talk about the Mumbai market, from Borivali to even BKC for 2 BHK, now rate has come to 2.5 crore. So this is not something which was earlier trend, because people who are staying or working in that particular area want to buy house in that area. Another thing what builder community has done very smartly, prices are constant, but the square foot flat that you to buy, it has considerably come down. So I think these are the factors which are playing important role. And you see, sometimes you go to western suburbs in Mumbai, the kind of new development which is happening in the real estate sector, and if you inquire about new houses, people will say that builder will say that your desired inventory or desired flat, etc., is not available only. So this is not something you need to read the balance sheet. Just keep your eyes and ear open.
Actually, in the city of Mumbai, at least where I'm also staying, and you've given an example also of the suburbs, Ashish, you can't find any space that is not under development right now, actually. Is it, Shrishti?
But at least looking at the prices, I'm not looking to upgrade myself yet.
She's given a caveat and disclaimer there only. So, yes, but that's the take coming in on the real estate space. You have DLF that's made on the list for both of our experts. There's Oberoi Realty, Prestige Estates that Ashish likes, and as always, bullish on the real estate space, irrespective of what color we wear. DLF, Anant Raj, and I think now Godrej Properties also makes it to this list. So that's the holistic view coming in on real estate space. We will slip into a break. When we come back, we will start taking your queries. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock related queries. Remember, viewers, you can connect to us live on the WhatsApp number that will be flashing on your screen. Do remember, each time you write to us, do remember to mention your name, the stock that you're looking to invest in, mention that name as well. Along with that, mention the buy price, the quantity, as well as the time horizon if you already purchased the stock. In that way, our experts will be able to help you better. Talking about experts, we have Kunal Bothra as well as Ashish Maheshwari joining us. Once again, good morning to both of you, and I will request Shrishti to take forward with the first query that is pouring in on our WhatsApp number. Shrishti?
All right, let's get started with all your stock related queries, and a lot of the queries have already started pouring in, but at the last minute we're just trying to get the queries. Okay, so the first query that I have is coming on J&K Bank, and this one is for you, Kunal. This one is coming from Anu from Gurgaon, where she is holding 4 shares of J&K Bank from a price of 149 rupees. Can she add more at current levels for a medium-term outlook?
So I think 149 is a bit of a steep price for J&K Bank. I think what you should ideally have taken advantage was when the stock had corrected back towards that sub 120 levels in mid of March. So, even as of now, I would believe that the chart looks a little bit more sluggish. So I think from a short-term play, which means that there could be a scope of another 5-7 points correction for J&K Bank before the stock finds its mojo back. So I think I would probably suggest that we wait out for another 5-7 point correction. 130 approximately could be a point where you may look at average J&K Bank. But I think yes, it's a good stock which you should hold on from a medium to long-term play.
All right, coming to you, Ashish. This one is coming from Kumarji Sharma, who's writing to us. He wants to know about IRCTC. He's purchased the stock at levels of 980 rupees per share. He wants to know what's the long-term prospect coming in for IRCTC. We know that all the PSU counters had a good run, but IRCTC was the one that started picking up pretty much later in that stage. But for the long term, IRCTC a good bet to stay with?
Yes, in long run, surely it's a good bet. First of all, post this election period, we are expecting that another round of reforms or major spending will start in railway stocks. So some of the railway stocks already we started moving in. IRCTC is though bloomer, but I think this will also catch up because consistently making 300 crore kind of profitability, and the way travel is again picking up, companies like IRCTC will surely do well. So my suggestion will be to remain invested. 1 year price target will be 1200 rupees there.
All right, moving on then, and the next question that I have, Ashish, is coming from R. Mundada, and he's saying that since gold is at all-time high, any proxy play in the Indian stock markets there where he can play this rally the gold, and which stock is better for a fresh entry? Stocks like Muthoot Capital, Manappuram Finance, or Capri Global. Any stock that you wish to highlight at this point in time?
Yes, so ideally to buy 2 stocks. One is directly jewelry seller, and another is financial. So I suggest you Manappuram Finance, which look more promising, and at the same time, Kalyan Jewelers is a stock which you can buy as a jewelry retailer. I think both will do well because whatever the bull run we are in gold and silver, this is not going to die down in a short period. T24, we are going to see a good run up in these stocks as well as these two in gold and silver also. So buy both of them.
All right, Kunal, let me come to you with the next query. Give Ashish a break. Though our viewer has sent 2 set of queries, one is fundamental, one is technical. So let me take your technical query to you then, Kunal. This one is coming from Kishore Sharma, who's writing to us from Bihar, and he has purchased Karnataka Bank 450 shares at a price of 440 rupees per share, as well as Polycab 232 shares at a price of 4,700 rupees per share. For the next 2 years, he wants to know what sort of a strategy should he adopt for both of these counters. What sort of a target should he keep in mind?
So Karnataka Bank, you mentioned price as 440.
Yes, 440 is what he's mentioned. Yes.
The stock is almost at 238. So I would probably believe that the stock looks quite strong on the long-term charts. So I would believe you should hold on to the stock. Even though stock, I think right now is retraced back towards its 2-day moving average, I would still believe that it's a very attractive name to hold on to if possible. And if the prices are adjusted, then you can probably even add further at current levels or closer to this 220 mark, which is almost 100 DMA for the stock. Now on Polycab, it's a very interesting chart because I remember that a point when the stock was falling down from 5,200, 300 plus mark towards sub 4,000 levels in a matter of few days. The stock has managed to recover almost the entire kind of a sell-off for itself in the process of the last 2 months post that sharp sell-off, which means that the stock has done remarkably well from a medium-term perspective. I think it's a stock which is holding since your buy price is lower. I think you could probably continue to hold on. Keep a hard targets at least over the near term of 5,500 to 5,700 for the stock.
All right, moving on. And Ashish, coming to you for the next query. This one from Sangeeta, and she's holding shares of Irida, 158 in quantity from a price of 174 rupees. What's the outlook on this one and any targets to look out for?
Yeah, Irida is again a stock which has given very good returns earlier. And now after some consolidation, again the stock is going up. First of all, in renewable energy, there's a nodal agency which will be taking part in the Prime Minister's solar mission, where a lot of things need to be done in the next few years. So companies like REC, PFC, Irida, they will continue to do well. So my suggestion will be to remain invested. It's a very good bet in long run.
All right, this one is coming in from RK Jalan, and this one's for you, Kunal. He wants your view on TV18. He's holding a 41,000 shares at a price of 48 rupees per share. What sort of a target should he look at?
See, I would suggest to exit or sell this on minor rallies for itself, because the stock is forming a bearish flag formation on the charts. By that I mean, from 66 levels in this recent correction, the stock has fallen very sharply towards 40 to 43, 44, 43 odd mark, and from there the stock has been consolidating at the 200-day moving average. Now the patterns, volumes, the indicators, and the way the stock had corrected indicates that there should be maybe one more round of correction for the stock with the short to medium term. So since you've bought at exactly almost the current levels for the stock, I would believe it's a good time where you look to exit. And then in case if you are looking to buy back again, then maybe closer to 36, 38 mark would be a better zone to buy the stock.
All right, Kunal, once again coming to you, because of late you have been tracking this counter. That is Samvardhana Madasan, and Subramaniam from Chennai wants to know that is this a good time to enter for a short term?
Well, it's a very good time to enter the stock, but I'm not sure whether it's from a short term play, because the stock seems to be just getting into a plateaued kind of a consolidation closer to this 120 mark. So over the last, I think 4-5 months, we've seen closer to 120 levels, and then 110, 112 mark is where the stock has been ranging broadly. So the stock is spending a lot of time consolidating over here. Maybe this consolidation may continue for another few weeks or a couple of months before the stock gets into a breakout mode. But the charts on the medium term basis are very attractive. So we can start at current levels. In case if the stock dips down to say 110, 112 mark, then you can look to add further. That could be a better strategy, but hold on to it from a medium term play at least.
All right, another one actually, Kunal, coming your way from Mumbai. He wants to know whether he should look to buy Cochin Shipyard or should he wait for some more time for the stock to come down to levels above 760 to 750 rupees per share levels.
See, I'm not sure whether those levels would be reached anytime soon for the stock. In fact, Cochin Shipyard is something which I recommended last week on the day when the stock had given that breakout of 3 months of consolidation, just around that 960, 980 plus mark. Now, interestingly, the stock from those levels have moved up almost 200 points to now 1140 plus levels where it's trading right now. The way the last 2 years, 3 years of charts have been placed for Cochin Shipyard indicates that the stock gets into a breakout zone and then gets into a time-wise consolidation. So, and not a major price retracement, which means that in the last 2-3 years of the charts, it's not retested the previous swing lows for itself. So, expecting that this trend would continue for Cochin Shipyard and the stock may not get into a major price correction. So, you can start buying maybe 1/4 of your quantity at current levels because the stock has run up, and in case if there is any of a mild correction, say back towards 960 mark or 1000 levels, look to add further.
All right, moving on then, and the next query that I have, Ashish, is coming on Bandhan Bank, and I was hoping for one because whenever there is a any stock having some negative news, there are always some buyers looking out from that in the retail space. And Subrata Mukherjee wants to know, is this a right time now to buy Bandhan Bank, though the stock has recovered from the day's low for today? But what's your take on Bandhan Bank? Good time to enter?
I think one thing is clear that though in spite of founder going out, somebody else will come at the helm of the affairs and run the bank. This is not something that bank is going to shut down or any such negative impact is going to happen. And I think once this knee-jerk reaction, this will be a good time to accumulate bank for long-term investors. Though stock is near 52-week low and has not delivered good returns to investors so far in this year, but I think this fall should be used as a buying opportunity for long-term investors.
So that's the view coming in on Bandhan Bank. Let's talk about some good stocks, risk reward stocks that one can enter, accumulate for the long term. Then Ashish, this is from Vishal coming in from Dubai. He wants to know about fundamentally strong companies that he can look to invest in. Let's speak about some of the good realty space stocks. Apart from that, anything else that looks good to you?
So we can at consumer durable play like Voltas is a stock which I like at 1300 odd rupees. Or stock has moved up today. This is a stock because of the summer situation, what is prevalent in across India. Your Voltas continue to do well. Blue Star will do well. So I think for 1 year perspective, these Voltas and Blue Stars can be added. Along with I like VDL, that is Vedanta, because this is again a proxy play on the rising commodity prices. And Vedanta is a company which is having copper, silver, aluminum, nickel, zinc, power, oil. Everything is embedded in Vedanta portfolio. So they will continue to do well. So this will be my pick.
Right. Those are the top bets coming in from Ashish right now. But Fears, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now, Sell Now, a show where we get you answers for all your stock-related queries. And continuing the same, the next query that I have, Ashish is coming from Bishaka from Kolkata, and he has KEI Industries holding 10 shares from a price of 1250 rupees and having great profits in this one. Good to hold on, or would you suggest to book some partial profits? And he's also looking to move into Tata Technologies. So will that be a good move to take out some profits from KEI and make it in Tata Technologies?
No, I don't think it will be prudent move. In my view, KEI was a good investment for you. You have tripled your money in 1 year. But still, I'll suggest to remain invested because demand is going up for ultimately power. So all those companies which are into power ancillary like KEI is a leading player into cables and wires. So they will continue to do well. So in my view, you should not leave blue chip stock or the stock which has given you very good return. And Tata Technologies is a underperformer bet. So it's a void in my view.
Right, let's actually take the next query then, and we'll try to fix that feed from Ashish. This one's from Kolkata. And Kunal, he wants to know about Wipro. He's holding about 100 shares at a price of around 484 rupees per share. He wants to know what's the view coming in for the short term. Can he actually expect 510 very soon for Wipro? No doubt today the stock may be moving on the news-based information. Also, let's not forget you'll have the earnings for IT sector also come next week.
Absolutely. I think that's going to be the trigger point for many of the large cap IT names. And, I think what one would be looking out for is that the selling which has been quite rampant into these large cap IT names, whether that gets over or not, and whether these stocks are at the cusp of a turnaround, both in terms of fundamental parameters, of course, as well as in terms of the selling parameters, which have the vicious for these names. So I think that's the only pattern which one should be looking out for. It's a bit too early to try and judge, which way the stocks could move up higher, because the results could swing the stock price patterns by a margin of 5% broadly. So I would probably reserve my comments over here, but I think post results, even if the stock say comes back to 500 plus marks, assuming on the back of good or healthy results, then I would believe that even that could be a good point for you to start buying because of the way the stock could potentially turn around.
All right, that's the take coming in on this counter. We're moving on to the next one, and this one is coming from Karthik from Bangalore. And Kunal, this one is on Marico. He's holding this counter from a price of 394 rupees. Good to hold on, or should he exit at this point and maybe look out for better opportunities?
No, I think you can continue to hold on, but you know, I'm sensing that of course you would probably have done a a reward check into stocks from the FMCG pack, because these stocks, they tend to give you very slow returns, and you have to probably hold them for a period of 3 years, 5 years kind of a time horizon to try and encash on the much higher trajectory of returns for these stocks. Because so far the stock is struggling below its 200 moving average. Very recent last 2-3 days we've seen mild pickup of price action, but I would believe that these stocks as a bunch, they would probably tend to underperform in a certain of the markets, and when the market gets on to a bit of a volatile phase, these stocks, they tend to come back to their true nature of defensives and then give better returns. So I would probably believe that Marico is a stock which is definitely quality. Should hold on.
All right, this one is coming from V. Murli from Bangalore. This one is for you, Ashish. He wants to know if GE Shipping is worth buying at current price, as well as between Elecon Engineering and Triveni Turbines. Which one do you think is better for a relatively shorter term?
So GE is concerned, this is stock has given fantastic returns in the last few months. But in my view, the way things are shaping up in Red Sea, etc., direct shipping bet I'll like to avoid. And stock has already moved up a good set of profitability numbers, etc. But now the stock has come to a saturation. So if I have to buy any shipping stock, I like to buy Shipping Corporation of India instead of shipping, where still momentum is to be captured. So this is about GE Shipping, and among the other two stocks, I like more Triveni Turbine as such as an investment bank, because Elecon is a stock which is going nowhere. So I'll prefer Triveni Turbine.
All right, like Triveni Turbine at this point, but moving on. And Kunal, the next query that I have is specifically for you, coming from Tushar. And he wants to know, can he make fresh investment in Kajaria Ceramics as well as LG Equipments at this point?
Kajaria Ceramics, yes. I think that stock, even though it's drilling below its 200-day moving average, the longer term trends are very strong for the stock. And I think at current terms of 1250, it seems like that the stock could probably have passed out the worst phase for itself. And you could probably expect the stock to now get into much more better territories going forward. The volume patterns are quite attractive. The indicator patterns are also very attractive for Kajaria Ceramics. I would recommend that as a buy. LG Equipments, the only catch is the erratic nature of volume. So today, for example, the volumes are on the decent side, but on an average, the volumes have been just about some 1 or 2 lakhs shares for the stock, and that's a bit more illiquid. So I would probably expect the stock to consolidate over here. The trends can rise up towards 720 mark, but I would probably believe that Kajaria Ceramics is a much more better bet relative out of these two names.
All right, the next query that I have is coming in from Babu from Tirupati, and he wants to invest a lump sum amount about 50,000 or so in Sika Interplant Systems, I beg your pardon. In fact, Ashish, off late, I don't know if you track this counter, but off late we have had actually a couple of investors actually ask about this particular stock. If from the business summary that I can see, is primarily engaged in manufacturing and rendering of services in engineering, I think in aerospace and defense as well. But since you nodded your head the moment I asked you, so which means that you do not track this particular counter. So let me take the next query then, and please, this one is coming in from Siddharth. He is writing to us from Bangalore. This is for you, Kunal, because he's mentioned he's a big fan of yours. He wants to know about PBL and JBM Auto for a period of 3 to 6 months. He's planning to enter both of these counters, given the fact that now the small cap correction is out of the way.
Well, thank you so much, Paul. Out of the two names which you mentioned, PCBL, Philip Carbon, is something which I think is quite a bullish chart. I think that stock is completely a phase of correction. I think, if I'm not wrong, the stock corrected a 30% in this mid corrective phase, and now it's bounced back towards its nearing its 50 moving average. It's a strong chart, has been doing pretty well. I remember a breakout point closer to 165, 185 for the stock, and from there the stock had moved up significantly higher. So I think at current terms of 270 approximately, you can consider buying the stock. For JBM Auto, on the other hand, I think the stock is now starting to get into a corrective phase. So it looks like that the stock had gone into a sharp correction, mild bounce back, and then a possible down which is starting off again for the stock. So you can probably wait out for some more time. Maybe sub 1500 levels could be a better territory to buy in case the stock corrects to that kind of a zone.
Right, moving on to the next query. And Ashish, this query is coming from Mohit, and he's been holding 2,000 shares of Trident, and his buy price is just ₹3.90 is what he has mentioned. And now he wants to know what is the outlook on Trident going ahead with the next 2 years. Should he continue to hold on?
Yes, as far as the stock is concerned, quite diversified company now. So they are into yarn, terry towels, paper, chemicals. So only one challenge is that the profit, what we are witnessing past a few quarters, are quite a stagnant kind of profit. And then we saw stock correcting from 52 to even 36, 30 levels also. So my suggestion will be to exit from this, because I don't see in short term any major upside here. So better to book profit.
All right, Kunal, this one is coming for you from Alex. He's writing to us from Pune. He has 100 shares of Advani Hotels. I'm not sure if you tracked this one, for their average price of 84 rupees. 30 shares of BLS International at a price of around 350 rupees per share. He wants to know how do the charts look for the period of about 2 months or so.
So Advani Hotels is something which I track at least off late in the way the stock has given a breakout. And I think if I'm not wrong, the stock has come out of a multi-year breakout in the last 2 quarters. It's done phenomenally well. So I would believe on the back of the last 3-4 months of price performance, the stock prospect over the long term looks very attractive. So I would probably recommend a buy even at current levels, and the long term charts are indicative of a rounding bottom formation, something which is very rare in stocks. And typically when they come out of such kind of a pattern, these stocks, they restart a long term uptrend for themselves. So I would probably believe in that aspect. You can consider a buy over here. For BS International, the stock has been doing exceptionally well in the last 3-4 years. I remember, I think, tracking the stock when it was almost at 50 odd rupees, towards a point when the stock had jumped up to, I think, 350 or 400 mark. So it's come back to that kind of a territory around the 350 levels. So you may look to buy on dips of the stock, but I think out of the 2 names which you mentioned, I think as a risk reward play, Advani Hotels is something which looks attractive.
All right, moving on to the next one. Once again, coming to Kunal, this one is specifically for you, coming from Gayatri, and she has 4 counters in her portfolio, and she's already sitting at profits, but wants to know what to do in these counters and whether she can go ahead and accumulate more. Zydus, Shobha, Birla Corporation, as well as Hindalco. These are the 4 stocks in her portfolio. What's your suggestion in all of these?
Zydus, Shobha,
Birla Corporation, as well as Hindalco.
So I think you should probably be looking at, if in case you have to book out profits, then I would probably recommend Birla Corp is something which you can consider booking out profits. Zydus, Hindalco, and the second stock which you mentioned, Shobha. I think all 3 stocks are looking attractive. It's not as if the trends have matured or these stocks are near to their overbought territory. There's still some room to go, at least for these stocks on the upside. And in case if the sector starts to participate, like for example, real estate stocks have been doing pretty well. So Shobha has also done reasonably well. And the real estate sector gets into a second leg of up move, then we can expect stocks like Shobha which can move up higher. Same would be the case with Hindalco. That's a stock which has also recovered quite well. Metal stocks are in the limelight as such in terms of price performance, which means there should be more room on the upside. So I think except for Birla Corp, you can continue to hold on all.
All right, this one is coming for you, Ashish from Deora. He's writing to us from Kolkata, and he wants to know among the 2 infra counters that he's mentioned, which one is better to do an SIP in. One is IIP Infra, the other one is GMR Infra. And apart from that, he also has Cupid in his portfolio. He bought it very recently at a price 123 rupees per share with the quantity above 500 after the stock split. So what should he do with Cupid for the longer term? Stay put with this, just exit via trading? And between IRB Infra and GMR Infra, which one is the better bet to do an SIP in?
I suggest you do half of both GMR Infra and IRB Infra, because both are having their own set of expertise. Like GMR is more into airports and bidding aggressively for newer airports, along with IRB and into the road projects. And both sectors look promising between infrastructure space. So my session will be do for half in both. As far as Cupid is concerned, is again a trading bet only. So just use as a trading stock.
Okay, that's the take coming in on IRB Infra. But with this, viewers, once again, time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. Watching Buy Now Sell Now on ET Now. Let's continue taking all of your stock-related queries. Then the next query that is coming in is from Gautam. He's writing to us from Mumbai. Between Reliance Industries and HDFC Bank, he wants to know which is the best pick for the next 12 to 18 months. And finally, someone has asked this question, Kunal. Everyone's only been harping on how Reliance and HDFC Bank both need to be in the portfolio. Now also you'll say the same thing, but he's asked you a tough question between Reliance and HDFC Bank for the next 12 to 18 months. Which should he invest in?
Well, it's a very tough one, frankly, because it's very difficult to try and compare both of these stocks. They're class performers in their each categories. We've seen what Reliance has done over the last 5-7 years, specifically from 2017, and what we've seen HDFC Bank also doing over the last decade and more. In terms of price performance. So very difficult to try and pick and choose one. I think the best way to try and portion is have a, if you're allocating capital to these stocks, say 100% bias towards one of them, might as well have 50% allocated capital towards each of the stock and stay invested or look to buy both of these stocks.
All right, moving on to the next one. And once again, Kunal, coming to you. This one is from Durai from Chennai, and he wants your take on Union Bank, where he has bought 700 shares from a price of 122 rupees. Can he add more at current market price, and any target price to look out for maybe in the next 4 months?
See, I'm very bullish on the PSU banking prospect from a medium to long term play. In fact, if you look at the last 2 months, the mid cap end of the markets had corrected. The PSU banking stocks, ones which had corrected the least, I think, if I'm not wrong, as a basket overall. And Union Bank was amongst the first, amongst the few names which had also corrected, quite less. So I think in that aspect, it's a quality stock. From the next 4 months, again, difficult to forecast from a very short-term play. But from the next 4 months, I would probably believe, say, closer to 170, 175 is where you can keep a target for the stock.
All right, this was from Narendra Shah, who's holding Jubilant Ingrevia from the price of around 850 rupees. From the price of around 615 rupees per share. Around 850 shares for the last 18 months or so. He wants to know whether he should currently continue to hold, average or sell, Kunal.
Jubilant Ingrevia.
Yeah, Jubilant Ingrevia is the counter. Buy price is 615 rupees per share. 18 months is the holding period. Since 18 months he's been holding it.
So I think you should continue to hold on even now. What's changed for the stock so far is that it's guiding towards its 200 moving average or broadly at that pivot. When the stocks consolidate and when they go into continuous attempt towards breakout of their resistances, eventually the breakouts happen. For example, for Jubilant Ingrevia, the stock seems to be taking resistance at this 520, 500 kind of a resistance band. Now, it's a matter of time that the stock would probably get into a breakout, and once that happens, the longer consolidation, the stronger as well as the lasting the breakout is for the stock prices. So far the consolidation has lasted for almost 7-8 months for the stock, which means that the potential breakout could be, nearing up pretty soon for the stock. I would suggest a hold.
All right, moving on to the next query. And Ashish, I'm not sure whether you tracked this one or not, but Mali has written to us to know about Paramount Communications. She has 1,000 shares at a price of 95 rupees. Should she go ahead and book loss in this one is a query. And another query is, at this point in time, can she buy KPI Energy or Webel Solar at current market price? Ashish, you could unmute yourself, please.
Sorry. So this is Paramount Communication. If you see the business wise, again, this is a company which made wires and cables. So the way other wires and cable stocks are moving, Paramount Communication will also move. I can see today's stock up by almost 5% odd, but I'm still more bullish as far as KEI Industries or Havells are concerned compared to mid-cap here. But still, in my view, don't need to book loss instead of this exit from this stock at around 100 rupees and shift to Havells or KEI, which will be better bet. As far as Websol Energy is concerned, I think the way other solar stocks are doing good, this will continue to do well. So you can buy Websol Energy.
With that, let's kickstart with the rapid fire then. The first one is coming your way. Ashish from Mahadevan. Laurus Labs, 2,000 shares at 3 rupees per share. Worth holding on to it fundamentally for the period of 3 to 5 years.
Yes, hold Laurus.
Okay, Kunal, coming in on Bandhan Bank, Anupama is holding 200 shares at a price of 201 rupees. Any levels to watch out for?
To hold on, hopefully post this negative reaction for the stock, I think it could find an important for itself.
Kunal, Vedanta, 50 shares at 270 rupees per share. This one's from Padma Sivarao. Should he have a sell call at 330 or should he wait for some more time?
Wait for some more upside because I'm bullish on the entire metal pack.
Okay, Kunal, what's your take coming in on Mahindra Life space? Sam from Goa has already bought these shares from a price of 620 rupees. Any short-term targets?
I think it's an excellent chart. Short-term wise, you will go for targets of 700 plus, but I think you should hold on to it from long-term.
All right. This one is coming from one of our viewers who has Eicher Motors for the last 10 years, has been a multi-bagger for the investor. Wants to know, stay put with Eicher Motors for the longer term, Kunal?
Absolutely, yes.
Okay, Ashish. Mayank Saraf is holding Schneider Electric from a price of 600 rupees. Can he add more at current market with the next 2 years investment horizon?
Yes, I'm quite bullish on power and power ancillary stocks. Schneider will also a good bet.
All right, another one your way, Ashish from Karthik for Bangalore. Global Spirits, he's purchased at 200 rupees per share. He wants to know whether he should average right now for the longer term or do nothing and just stay put.
In my view, exit and shift to Som distilleries, which can give you better.
Right, Ashish, one more for you. This one is from Krish, holding SBI Life 250 shares from a price of 1,235 rupees. Can you go ahead and partially sell this one and make an investment in IC?
Yes, it will be a good move.
All right, Kunal, next one's for you from Mahalakshmi. She has about 80 shares of Newgen Software and 160 shares of Sonata Software. Both of them making spectacular about 40%. Wants to retain one of the above. Which one should she look to exit?
So I think maybe Sonata Software is what you can look to exit.
Okay, Ashish, just last one from you. This one is from Nishi. Bought Max from a price of 2,306 rupees. Good to hold on or book some profits here?
No, continue to remain invested.
All right, with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Ashish for joining us on this show, talking about realty sector in depth, as well as taking all of our viewer queries. So with that, viewers, we come to an end of this edition of Buy Now, Sell Now. It's a goodbye from Srishti, myself, and the team that put the show together. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.